We really love our deductions. Of course, a lot of people are pretty familiar with home office, mileage deduction, meals and travel. Some things you might not know: if you are claiming mileage right now on a vehicle, you cannot actually do actual expenses, which would include depreciation. Or if you're doing some actual expenses on your car, you cannot do the mileage deduction. It's got to be one or the other. Home office deduction is a fantastic strategy that helps you save on taxes, and we find that is frequently avoided because people are afraid of audits. The tax commission, the IRS, is not actually auditing you for your home office deduction unless you're being excessive with it. So just know, if you're playing it safe, or even if you can legitimately claim the excessive stuff, don't be afraid of claiming it. Meals and travel, this is a special year where we can actually claim 100% of your business expenses that are spent in a restaurant. That's not usually the case, but this year is one. So it's pretty awesome. Look into that as well. An accountable plan is something you need to set up for claiming those first three, as well as other out-of-pocket expenses if you have an S corporation. So just be aware that there may be a reason if you've set up an S corporation and you don't have an accountable plan. You probably want to get one in place. You can Google what those are and get them set up pretty easily. If you want a more complex one that's pretty binding, you do want to consult with a lawyer. Captive insurance is one of our favorite strategies for higher revenue clients. If you're at a point where you're at, I prefer $500,000 plus in net profit. I have some colleagues though that are perfectly comfortable with $300,000 plus. I find that at 300 to 500,000, you tend to be okay with it, but at 500,000 plus, you really love it. The real trick is you want to be able to put $75,000 plus per year into this strategy for it to be a fantastic strategy for you. And what you're doing with this strategy is you're creating a second company to provide insurance to your primary company for things that you wouldn't typically insure otherwise. And you are doing so in a way that allows you to get some major tax benefits, either by eliminating tax or changing the way it is taxed, or just straight up deferring it, one or the other.